Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. And if you've been following my channel, you know on Mondays we speak with the legend Rylas Dana, who is an estate attorney. How you doing, sir?
Hi, good. Legend status today.
Yeah,
Feeling
legend
great.
status today. Yes, my new puppy. I don't know if you heard her whine or whatever.
Oh, I
Yeah,
love the new puppies. Is
yeah.
that
This
Sunny
is
or is that
Sunny. This is Sunny. Yeah,
so cute?
the 8-month-old. But yeah, I have to separate them sometimes because they play too rough.
Yeah,
So
virtual YouTube pets are my favorite. I get to see them.
virtual YouTube pets.
Uh,
That's awesome.
Actually, my favorite was someone in my office had a little dog she would bring in a lot. So it was
Yeah.
nice to have a part-time office dog.
Yeah, I know. You can pet them, you give them a couple of treats, and then let somebody else take care of them. Pick up
Yeah,
after them.
yeah.
It's awesome. Hey,
So,
one thing I wanted to talk about with you today is on my daily financial news, right? We talked about something called the Pandora Papers, I believe, from memory. And essentially, it is a treasure trove of documentation where, quote unquote, the wealthy, the rich, whatever, have been using offshore entities and trusts to, I'm going to call, hide their identities. Maybe there are, other reasons.
shelter,
Shelter.
protect.
Yeah. So I thought I would ask an attorney, an estate attorney, about offshore entities or offshore trusts. I think they mentioned the Virgin Islands a couple of times. And more specifically, I want to shout out once again, Julio Iglesias, who obviously, if you don't know who he is, he's I don't know, a semi, if not famous singer who took his proceeds decades ago and rolled them into a nice portfolio of 12 properties in Miami, worth over $100 million. So shout out Julio for doing the work, man. But tell us about using, offshore entities or trusts. What is it? Is it legal? Is it shady? What's going on?
Yeah, definitely legal, and it's a good option. It's an old option, something that's been around for a while.
Yeah.
And I guess this comes up just when they're talking taxes, huh? This is kind of like the let's go after the rich type of a thing.
Yes.
But it's nothing new, so it's not like anything new that's happening. So how did it get disclosed? That's what I'm curious about, because there really is nothing private or secret anymore. You still got to pay taxes on these deals,
Mm-hmm.
but basically, I guess part of the idea is if you give things away to an irrevocable trust,
Mm-hmm.
if you get away from it, that
Mhm.
can save you from taxes
Okay.
and also like from future estate taxes,
Mm-hmm.
and then also potential creditors.
Yeah. I don't know. So the Pandora Papers is something I've read about a couple of times. Essentially, it was I don't know if it was a hack or a leak, whatever you want to call it. Somebody had 2.9 terabytes of data, just lots of stuff, and apparently lots of reporters have been, because it's just raw data. They've been pouring over trying to figure out who's who in the zoo, and they found some people like Putin is like Vladimir Putin's mistress apparently got a house in Monaco, and I don't know, the king of Jordan's done this or that. Again, most of this stuff is probably legal, but it just probably looks
Yeah,
bad, probably maybe reputation damage if they find stuff like this.
yeah, it's probably mostly real estate stuff they've discovered,
Mhm.
because real estate, it's got to be titled in whatever state it's located in.
Got it. Okay.
And then that's going to be some sort of trust or LLC, which is owned by some other entity,
Mhm.
right? And there's several layers to these.
Oh yeah, they're talking dozens in some cases.
So,
In
but
these.
then you trace it back, and basically the idea of these offshore trusts, and I would say the trend in estate planning in my career
Mhm.
is things have gone onshore. You can get the same type of protections in Alaska, Nevada, but
Yeah, that was what I was going to ask. So a lot of these apparently have been done for decades, right? Julio Iglesias, for example, has been putting together this portfolio since the 80s, right? So it's almost 40 years. So was it, again, you weren't practicing in the 80s, so maybe your father's or your experience with your father's practice. Was that kind of the thing in the 80s is, hey, let's go to the, Grand Cayman or Cayman Islands or what, Virgin Islands. Let's
yeah,
put everything offshore. That was like a trend in the 80s.
yeah, you pick your jurisdiction,
Mm-hmm.
and certain countries or certain places would have laws where basically they don't recognize a U.S. judgment after a period of time. So once you
Ah,
set up your trust,
okay.
and the really favorable countries, like I think like Venezuela's one, or I don't know what they're talking about, maybe like Nicaragua, some of these, but but they have as little as 6 months
Okay.
where you can set up a trust there
Mhm.
and have the waters calm for 6 months, not know about any liabilities at the time, not have any
Mhm.
pending lawsuits, pending judgments.
Mhm.
And then after that 6 months or whatever it is in that country,
Mhm.
and now you can do this here, like Nevada, Alaska, and it's about a year or so in those places, maybe a
Okay.
couple of years. And then, but they won't recognize a judgment. So in these countries, they'll say, "Hey, you know what? Get out of here." They're not
Yeah.
going to listen to the U.S.
Go somewhere else. Yeah. Yeah. Okay. What, so if you're just the average citizen, maybe you own one or two rental properties, is there really, I mean, people here offshore, they hear the rich doing it and they may think, oh, I need to do that too.
Yeah,
That's,
it's fun to talk about,
yeah.
and a lot of the people that want to talk about it don't have a big enough problem, I would say.
Yeah, that's right. The pile of stuff's not big enough.
Yeah, so what I do is and I just explain the maintenance to it.
Yeah.
So now if you do something like that, I'm more familiar with like the onshore,
Sure.
the Nevada offshore trust.
Let's
That's
talk
kind
about
of
it.
replaced that.
Okay.
And so it's the same idea. You can set up a trust in Nevada for yourself.
Mm-hmm. Okay.
So you're the beneficiary of it. You can still receive from it.
Okay.
You can even still control it. So you can kind of wear both hats where you're still in control of it. You still receive from it, but it's an irrevocable trust separate from you.
Okay. I like
So
it.
that way, if there ever was a liability, if someone sued you,
Mm-hmm.
then they can't get into that trust
Got it.
because you no longer own it. It's
Right.
tied up in an irrevocable trust.
Yeah. It's essentially another, I don't know, I don't want to say person, but entity.
Yeah. Now, if the water really got hot, you would probably resign as the trustee and let a third party manage it.
Got it.
And you have to have a Nevada trustee or someone in that jurisdiction to be able to use the laws in that places.
Got it. Okay. Wow.
And like I said earlier, it's a little bit harder with real estate because it originates in some place. So
Mhm.
even though you try to pull real estate into a jurisdiction,
Yeah.
you
It's
got to
still,
follow the local laws where it sits.
yeah. The whole APN is kind of not moving right there. The parcel
Yeah.
number. Yeah. It's funny. So again, I want to go back to the fact that, yeah, this is interesting. It's fun to think about. But really, I think you said your pile or your problem's not big enough. I mean, I know I'm going to ask, I don't know if you'll answer, but when does it get big enough? Is it 10 million? Is it 100 million? Is it, I mean,
Yeah. So maybe 10 million, you can start thinking about some of these
okay.
things.
Yeah. So that's a number to think about. Yeah.
And there's no hard and fast numbers, right?
Yeah,
I
of
would
course.
say when you want to start paying the maintenance fees of these things.
So give us an example of maintenance fees. Like, are we talking 1% of balance or what are we thinking?
Yeah. So let's talk a Nevada trust.
Okay.
So, good common strategy. So you're gonna have some setup fees, which
Thousands of dollars.
yeah, thousands of dollars.
Okay.
And then you're gonna have to have a Nevada trustee involved,
Okay.
which is also gonna be thousands of dollars.
A year, right? Or is it just a one time?
Year, a year, every
Yep.
year.
Yep. Okay.
Your taxes get a little bit more complicated.
Yeah. There's thousands of dollars in the county fees. I know that one. Yep. Okay.
And basically there's kind of a strategy you're gonna have to babysit. Just
Yeah.
plan on meeting with your accountant and lawyer every year. And
yeah, so you're probably signing up for, I'm just going to pick a number, 8 to 12 grand in yearly fees for the rest of your life, roughly.
yeah, that'd be a good estimate, I would say.
Yeah.
That's fair.
Yeah.
Where like if you're gonna be, oh my God, I don't want to pay all of that and every year, then that's the answer.
Then the pile's not big enough. Yeah, exactly.
But if it's like, okay, yeah, that's I see the protections in this, and I want to put an extra wrapper or an extra layer of protection around my assets, it's worth it to me to invest the time, right? It's gonna be extra.
Sure.
Having a more complicated structure makes every loan you want to get, everything you want to do, a little bit more time intensive.
Yeah. The other thing I wanted to ask you about, and this may not be a thing, but as I'm trying to peel back what's in this Pandora's Papers, is it pretty common for people that I mean, I don't even know if it's a thing, but what it sounds like they're doing is they have trust inside trust inside trust, almost like a Russian nesting doll. Is that a thing, or did I misread that?
It's a thing.
Oh, it is.
I
Okay.
mean, there's different reasons why you'd want to do that. So like a strategy with the family limited partnership,
Mhm.
the idea is you want to break up the ownership
Okay.
and not have common owners of things.
Okay.
So
Got
that
it.
way you can take bigger discounts and
Yeah.
say, this fractional ownership is worth less because
Yeah, it's
lack
only
of
a part.
control and marketability.
Yeah, it makes total sense.
But you
Okay.
still want the control. So
Yes.
that's why it's a game of multiple entities.
Yeah. So again, the trust is about kind of trying to be, I think trust is kind of trying to hide the identity. Cool. Keeping control, obviously. Is it a tax dodge, or could it be
Um,
perceived as a tax dodge?
Potentially there's ways to.
Okay.
I mean, you're still, if you're a US citizen, you're still got to follow the tax rules, right? It doesn't excuse you, but
Right.
the idea was that it's they don't report back and they
Right.
don't listen to judgments.
Right. So the question I was wondering about, and I don't know this, let's assume you're a Chinese citizen. China's in the news today because of Evergrande and all of that stuff. If you are a rich and wealthy Chinese, upper 1% or 5% or whatever it is, and you wanted to move your money to, you want to plunk down a 20 or $30 million home, and you want to bury it inside a series of trusts. Obviously you're going to pay property taxes still because that is something there, but there's not really income or any kind. I mean, assuming it's empty or you're not renting it out, would that be something done in a trust? Probably.
Yeah, again, I don't know China law at all. I can't
Sure.
speak coming from there, but generally when you're purchasing real estate, it should always be in a trust, right?
Yeah.
And in an underlying entity as well.
Got
So
it.
meaning if it's for your personal use, like your own house, at basic, it'd be in a revocable trust.
Mhm.
If it's any type of investment, then it's going to be in some sort of LLC,
Right.
which should also be owned by your revocable trust.
Got it.
And then, as people have estate tax issues, so married couples, that's getting over 20 million now, or if they drop it back down to 5 million exemption, 10 million. That's when people start utilizing these additional irrevocable trusts where they give away some of their assets,
Right.
so they don't get taxed at that estate tax level.
Got
And
it.
then you'll see more of those irrevocable trusts.
Very cool.
Now, I wanted to mention what I remember in my career was Switzerland about 8 or
Yes.
10 years ago. Remember that? It was kind of the same thing where they disclose everyone that had an account over there.
I remember that.
I don't know how it happened, if it was a leak. And then I think the way I remember it is the US government was like, all right, we'll give you 1 or
It's
2
like,
years to come forward. It's like, we know what you did. We have a list.
Yeah, that's right.
If
We
you're
see
on
all
it, we
the.
won't punish you as bad.
That's right.
So just come forward.
Yeah, I remember. Yeah, that's funny.
So,
Yeah. So if somebody wanted to reach out to you, they're in California or Arizona, they want to talk about trust, LLCs, entities, how do you want them to reach out? And again, talk about your YouTube channel, because you have a couple of great channels.
yeah, so I practice law. It's danalegalhelp.com. So that's where you can reach out to me. I practice estate planning and probate in California, in Arizona. I'm over in California right now, so I was surfing this weekend. I like to
Woohoo.
get over here and do that. My other business that I have, I've also been working on that a lot as well, is for attorneys. It's called Maat Legal, MAAT.
Cool.
And that's where I help attorneys run their business. So I'm helping with virtual assistants and virtual paralegals and software that does the estate planning.
Very
so
cool.
letting other attorneys use the things that I've created.
Very cool. Well, thank you very much for your time. I hope you got some good waves this morning.
All right, yeah, it's been fun out there.
Very cool, man. Thanks again.
And thanks.